And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It's bright, it's beautiful, it's Sunday. No, it's sunny and it's Friday. It's about 7 a.m. here in California. Yes, we have great weather, bad politics. Wanted to follow up on what we've been discussing over the past couple of days. Actually, mainly wanted to circle up on this time frame on the 3-day. In particular, which today, not only will we have the 3-day closing, we're going to have the 2-day closing, and we're going to have the 4-day time frame closing, relatively higher term time frames, and the 3-day volatility is beginning to tick up. Where do we define, expansion though, is the question. When 3-day volatility gets above 25%, call it 24%, you could front run that with maybe 15% and say, okay, a move is initiated, but we did call it out 4 days ago on this last 4-day closure, multiple drives of hidden bearish divergence. Prices making higher highs. As you can see here, you got one, pretty much two, and then the third drive typically gets you a shot down to the green 55, and 3-drive philosophy says green 55. The 4-drive philosophy would say the 1618, which would be still at the at this level here, coming in the green 55 at about 25,000. So that is my main target since about 4 days ago. And what does that mean for price action going forward? Well, when Bitcoin goes down, altcoins go down a bit more. So we'll take a look at perhaps some of the altcoins and what those targets may be looking like. Short-term bounce here looks like, even as the dollar is rallying. So I'll cover that in a minute, but did want to briefly discuss what. So 3-day time frame, 4-day time frame, and the 2-day all closing today. 2-day volatility is now beginning to lift back up. We did say, hey, it might swoop back around. Just tapping into the bearish control zone. Similarly to the bullish control zone, after being away from it for a long time, first pass is a buy, right? And the second pass is usually where you get the rest of the move. And we would expect, as volatility expands on the 3-day time frame, for the price to go in the direction of the momentum indicator, our stochastic. And Stokes will remain down as long as we're below 29,400. And more importantly, on a daily invalidation point, as long as we're below this pivot at 28.8, kind of the major pivot we've been discussing over the past few weeks, then pressure is on to the downside. Let's take a look at some of the underlying market dynamics. Open interest currently at 8.3 billion, slightly ticking up here today from I think it was about 8.2, but as open interest comes off, typically price does come down, as we saw a nice bleed down there. That's all the leverage positions on the board, and you can see funding rates got slightly negative, so you were paying to go short there, and that was a couple of days ago. On the other side of that, we've got the leverage ratio, which is slightly ticking up. So maybe people are adding to their short positions. And then the crypto fear and greed index still at a neutral level. Where does the bottom come in? Well, likely when this gets back to the fearful zone, as you want to be a buyer when people are fearful and a seller when people are greedy. Okay, last thing I want to point out, some of the news. Market makers Jane Street and Jump retreating from the U.S. crypto trading, reported Bloomberg. So these are two major crypto hedge funds that currently support market making on some of the biggest exchanges. And what do? They put billions of dollars up, and they essentially They provide the liquidity for buying and selling on the markets. And without liquidity, well, what happens is you can see a lot more volatility in the market, which starting to become that trader's paradise we all look for when we get the big volatile moves to the downside and to the upside. So that means when, spot sellers come in and market sell or stop losses are activated, you can get a bigger move. So a lot less liquidity in the market right now. And there's no, particular area where you can just say, oh, here's the liquidity for the market. No graphs for that. But if we want to look at the liquidity really quick, we've been kind of following this as well. The Chinese liquidity, the stimulus has literally gone to nothing. So, hey, maybe when that spikes back up at some point, they are going to have to print more money. Chinese liquidity, they are notoriously driving up their debt to, way, way higher than the United States. And that is, could be one of the drivers for the next pump to the upside. So let's keep an eye on that. Then you got stable coin liquidity. We want to see that start to come up for the next pump to the upside as well. So I think that covers it. The 3-day volatility increase. So the average move on a 3-day volatility play is going to be quite significant, somewhere around 30%. 30% from volatility expansion. So you'd be looking at that last high over there, right here. So where does 30% down take us? Well, here's 20%. 30% is back to the $20,000 low. And this is kind of potentially what I'm looking for here is a swipe down to 25,000 for a bounce. And then maybe we come and tap this longer term trend line. We want to hold the structure on the weekly time frame and make, higher highs and higher lows. So, that's why I'm putting some bids in here at about 25,000. Frankly, I think any kind of a discount on Bitcoin right now is very, very worthwhile in the long-term picture. All right, let's check out Ethereum really quick and bring up the Gaussian channel once again. And this is also providing the impetus for a bit of a bounce. We just don't want to see a closure back below the mean band on the weekly time frame for Ethereum. Then you could target, all the way down here at 1340 on Ethereum. Bitcoin still holding it up relatively well. And what do you know? Mean band coming in at $25,000 right there. I would suspect at least a little bit of a bounce there. Also on the 2-day time frame, you can see here. Whoops. Let's take the Gaussian channel back off. Oh, just tapping it right there. The green 55. Usually bounces off the first pass there, first pass bounce, second pass, usually a bounce. Third pass is where you typically see those failures come in. So we could be in for a bit of a bounce here. And, technically we haven't broke the line in the sand yet. The day will close here in about 9 hours. Below that pivot is pretty much bearish continuation, any kind of a closure, especially below the wick low here at 26.5, which is where we're currently sitting right now, would, put in, the thumbnail here is just a bit of a what is it called? A clickbait title. Oh man, those 4 a.m.s are coming up early. By the time Friday rolls around, 4 a.m. is hurting. Watched a bit of a movie last night and gosh, well, it's good to be in here and good to be giving you guys some TA. Where could a potential bounce come up to? To be fair, the lower term time frames are starting to look like they want to bounce, but any kind of a tick back above, today's high is going to look good for a bounce tomorrow. And let's turn it around to some of the lower term time frames. On the 4-hour time frame, potential bounce initiated, but as long as the 9 is governing here on the 4-hour, you would suspect that momentum, to be fair, will cross back up here as long as we are, well, above 26,425, which we are currently there right now. So the question is, do we get one more leg down here? You can see volume is declining on the 4-hour time frame, and I would say it has to do with the dollar. And look at the dollar actually ripping to the upside right now, hitting our target, finally hitting that green 55. And the question is, are we going to break the range and hold above it here? Probably going to be a sell on the first pass, but technically speaking, after these, how many drives of hidden bullish divergence where price is making lower lows, but the RSI is making higher lows. Let's see it on the weekly time frame, because the week will close today, and coming back all the way from here. So price is making, no, it'd have to be from here. It would have to be from there, from this pivot way back here. Way back here. So that's a little too far away for my liking. No, this would be good enough for me right here. So this low in a coordinates, you'd have 1, 2, 3, and that would be confirmed this week with any kind of a closure above this level right here. And look at the dollar looking strong and healthy here, looking so with that kind of a drive of bullish divergence, technically you're looking for a target all the way back to the top side of the range, 3 drive variety, right? So I'll just mark it off here. Actually, 3 drive variety. So you've got lower low, lower low, lower low, but you've got higher lows, dramatically higher lows. And, but as long as we are below this guy right here, it is pressure onto the downside for the US dollar. And we're about to tick above last week's high right now. Just barely getting there. So close, very, very close. A tick above there. Probably going to initiate that second target up to this level. At 102.93, so call it 103. Volatility is now expanding on, it got an expansion fake out there and second expansion run. So how does this play with the economic data that came in today? Michigan Consumer Sentiment Report saying that, it came in lower than expected. Lower than expected. That's bullish for the dollar. And why? It shows what Fed Pal is doing is working. So inflation expectations coming to the downside. And again, bullish for the dollar. As you can see, dollar is rallying today and risk assets are taking it on the chin. S&P is starting to pull back. Dow is pulling back. And sorry, that was NASDAQ pulling back and S&P pulling back as well. So let's see if we can initiate any targets on the NASDAQ here. Sorry, S&P 500. To be fair, caught in the middle of the range. I saw a quote yesterday, it's the most boring, exciting market ever, as prices have been relatively sideways for, how many weeks now? Call it the last month. Let's see, weekly is going to close and we'll cross down below 41.37. So very, very close. With the dollar rallying here, we could cross down. Any kind of a closure below there is going to initiate that. Let's see if we have, there is a gap right there. No, that's not a gap. So if, do we have bearish divergence? Yes, we do. 2 drive variety. So Oh, 3-drive variety coming all the way back from here. So we're, again, on the S&P, 1, 2, 3 drives gets you a shot to the bottom side of the range, or at least the green 55. You know, I would mediate that with a weekly closure back below this pivot. So might not happen today, but, you know, going into next week, you know, we may be looking lower back to the bottom side of the range here. Also, if you look at this as kind of a massive range here, let's see if it's a little more clear like this. Massive range. Where's the mid-range? Somewhere right there. So, you know, targeting a move on the S&P next week, probably down to this level, and we'll see if we can bounce it from there. If not, you know, back to the bottom side of the range. A lot of divergence, 3 drives, and I would not be surprised to see, you know, that old sell in May and go away philosophy start to rear its ugly head. Let's take a look at the time frame, the shorter term time frames, which I've had having a lot of fun on recently. And are we getting a bit of a sell here? Let's see. Oh, HPDR indicator is quite a lot on the screen. And we are putting in a bit of a sell here. If we do close anywhere here or lower, you're going to see how many drives of bearish divergence, which should give us a nice little downside target. As again, you're going to have 1, 2, 3 drives back to the bottom side of the range here for this guy on the shorter term time frame. So again, price is making lower highs, RSI is making higher highs. I hope this is becoming more and more apparent to you guys. So price is making lower highs, right? 1, 2, 3. And the RSI is going to be making higher highs. This is a very powerful tool, one of my favorites to use to trade not only the higher term time frames, because it's even more strong on the higher terms, but the lower term time frames, it works on all time frames. So we got 1, 2, 3, right? And what happens? You lose the exponential, get back in the bearish control zone, and that downside move all the way back down to 26,130 will hit. And, you know, relatively low volatility as we are coming into the green 55. So not a perfect sell, but pretty darn close. And momentum is snaking back down to the downside. So pressure is on to the downside, even in the shorter term time frames. At a minimum, I'd be looking at 26,338 on the shorter term time frames. What else do we want to look at? The hourly pretty much had a nice little bounce here off of this declining volatility signal. Again, how does the BBWP work? This is the Bollinger Band with percentile. What does it measure? I'm going to put on one of my old charts. One of my old charts, because it has the Bollinger Bands just sitting there. It measures a volatility expansion. I love this one. And that's the distance between the Trollinger Bands, which are the outside. This is the Bollinger Band, the middle one here. Let's get rid of these EMAs. All right, that's the Bollinger Band. That is the Trollinger Band. And how does this one work? Well, generally speaking, when you break below it, you're going to hit the bottom side, right? When you're closing below the bottom side Trollinger Band, you expect trend continuation. So let's see, in fact, on the 4-hour, that pretty much does provide the impetus for our next target down, despite the potential bounce criteria here. You got volatility expanding, and what do I want to say here? So we did close below these two areas right here on the on this closure last night, and that does initiate a target down to 23,250. Let's check out the 6 hour. 6 hour giving us a much deeper target. Whew. 12 hour, same thing, much deeper target. And the daily, yeah, much deeper target. Perhaps this trend line does want to get hit over time. It's not going to happen in one swoop, but with low liquidity in the market, you'd expect right now the downside moves to be more potent, so to speak. And in fact, we haven't closed the daily yet below the bottom side cylinder band, but you can see volatility is just beginning to rear its head up on the daily. What about the 2-day? Yeah, important closures today. So any kind of a closure below that bottom side cylinder band, you'd expect some trend continuations, and that's providing the impetus for a bounce right at 25.6. 4-day time frame is way down there, but as we are losing the cylinder band right here, that does kind of provide that over time we are going to see some more downside continuations. Again, we got that multiple drives of bearish divergence on the 4-day time frame, and this is going to slowly creep up over the next month. So let's see how low does she go. I personally think overall this is just a major buying opportunity. Again, not financial advice. I'm not a financial advisor, but I want to give you guys a whole picture here. We talked about gold yesterday with the weekly close, with the daily having those drives of bearish divergence present on the daily time frame. I'm going to get back to my regular chart here. So gold has these, gold has these 1, 2, 3, let's see, 1, 2, 3, 4. Four drives of bearish divergence. And again, where can you learn about bearish divergence? Go to our Bitcoin Advisors website, click on the Resource Center, and get the cheat sheet right there, and post it on your desk. If you're a trader, these things help out quite a bit. Over time, you will develop your eye for this this nuanced trading application. Anyways, 1, 2, 3, 4. 4 drives gives you a shot to the 1618. And again, pointing this out, the 4 drive philosophy: 1 drive to the 9 exponential, 2 drives to the 21, 3 drives to the green 55, 4 drives to the 1618. Is it a guarantee? No, but it is certainly been fairly accurate in past times. So 1934 on gold, pretty good potential buying opportunity. Probably lines up pretty good with this, something like this working out. But if it broke here, yep, that would be in the cards. 1935 on gold, and we suspected that, hey, we'd probably sell off this region at least one time. Invalidation comes with any kind of a closure back above the 618 fib, which if we do this level, $2,050, daily closure back above there, and this will be negated for Mr. Gold. Did want to do a little review on Pepe coin, which now is hit our 21 target. We said as long as below this area, pressure would be onto the downside. And if Bitcoin bleeds it out, well, I assume this one's going to bleed it out even more. And you could target a move all the way down. Well, it looks like it's already been hit. Let's try the bullish retracement version for all the people that are bullish out there on this asset. Boom. What's the difference between a bullish and bearish? Yeah. So this one could do the full retrace, right? full retrace. What is the full retrace when you come all the way back down to your pretty much your starting point here as we lost the 382? And how does the fibs work? Well, sometimes you hit the 236, you rally up to the 618. So I will make an adjustment here and bring this little box of green, the box of peace and prosperity and death and despair right here. As long as Pepe is below this area, you suspect prices to continue to the downside. Weekly time frame just ticking below here, and yeah, that's going to be full retrace mode. A 5-day is going to close tomorrow. 4-day is going to close like this, and bearish continuations on this asset for all you Pepe guys out there. Sorry. Doggy coin heading out to the bottom side trend line. I do imagine this area does hold. If you're going to have hidden bearish diversion, 3 dried varieties, so I would be targeting a move down to at least 0.065 on that one. Fetch AI is looking a bit like Bitcoin double top. Where's the target on this one? Bit deeper. Probably next target is going to be 17 cents. Volatility is expanding on the 4-day. Bearish divergence all the way down in the bearish control zone. And yeah, that is a pretty clear, this is the last pivot to kind of hold up the market, but next target down is probably a little bit deeper for Fetch AI. Let's check out Matic, as I haven't looked at this one in a while. Matic closing below the range lows. Next stop down. It's going to be somewhere in this area. Daily volatility still expanding. 4-day is just starting to expand. So Bitcoin takes it on the chin. I would suspect Matic heads down to 74 cents. What other popular ones do I get asked about a lot? And we've been talking about Quant actually on the live streams, which we got shadow banned here. Quant giving us a bit of an early warning sign as we broke this triangle to the downside, almost a month ago. 4 times 5, yeah, that's about 20 days ago. We've been looking for this region to get tagged on Mr. Quant and the measure move all the way down to 72 bucks, but it's holding it up, to be fair, right now. And 4-day volatility is just beginning to expand, and momentum is to the downside as long as we're above one or below 111. So, if you can get a 4-day closure back above 111, which is now going to be right here, wow. Then you could talk about maybe a potential bear trap, but still looks like pressure down to me. Quant, Gala, another one. This one has some violent moves to the upside and to the downside, and it looks like pressure is to the downside right now, and you've got the 3 drive. Wow. So how low does she go? From this high right here, we got 1, 2, 3 drives back to the bottom side of the range. Depends on what you consider the range here. The range, perhaps the greater range, definitely is going to be here and here. And it looks like we're about to lose the mid-range. So 618 is lost. Could get a potential bounce back up to the 618 or the 0.5, but overall, if Bitcoin takes that leg down to 25,000, I would suspect this one wow, that's 40%. That's a big drop, guys. That is a pretty big drop. Anyways, I definitely enjoyed being here this morning. Hope I provided some value for you. If I did, Feel free to drop a like and subscribe to the channel. We'll be doing some more live streams going forward. I got to get rid of this blue bee that's just sitting on my face. And I'll be back tomorrow. Have a blessed and highly favored day. Sorry, back on Monday. It is Friday already. Take care and signing out.